Hello, what's up guys? This is Alex from Market-Wise Asia. Good to see every one of you here again. Today is the 11th of June 2021 and the time now is 11:30 p.m. Alright, so today is a Friday evening. So I hope you guys had a good Friday so far. And if you guys can hear me loud and clear, please say a hi in the comments. All right, so let me see the comments. We have Christopher, hello, 𝗖𝗺𝗽, hello, Danny, Vico, Gary, Jess, Teddy, Han Hok, good to see every one of you here. And if you guys can hear me loud and clear, please say a hi to me in the comments. So right now we have about 80 people in the room right now. I believe there will be more people who will be streaming in. And before I get really started, I think I just read the news that Malaysia is going to have another lockdown extension of the lockdown for another 2 weeks, right? So I hope you guys are still hanging there, all right? While for Singaporeans, right, as for me, right, the phase 2 heightened alert will end this coming Sunday. So of course, you know, dining in, we still can't dine in. So please, continue to stay safe and be prepared for all the, mask on and all this. Stay safe, keep your distance. All right. So we have about 100 people in the room right now. Hello. Let me see. Anthony, Catherine, Jack, MH, 𝗖𝗺𝗴𝗁𝗁𝗶𝗶. Hello. Is this the first time you are joining me? Hello, Imran. Hello, Chia Hong, Derek. 𝗖𝗺𝗴𝗁𝗁𝗶𝗶 is the first time you are joining me. If yes, thank you very much. Dennis E. All right, Audrey, good to see every one of you here. So, all right, so let me try to share my screen right now. Okay, before I get ready started, right? Again, so just the standard usual disclaimer. First, whatever I share today is just for educational purpose. It is no recommendation to tell you what to buy or what to sell. So please treat Alex as a fool, okay? I'm a clown. Please don't copy me. Whatever I say is just for educational purpose, okay? So we have 100 plus people in the room right now. So just give me a like and share. Liking is free. And also tell Facebook that you enjoy my content and want to see more of Market-Wise Asia or me in the future on your Facebook feed. Because if you don't interact with me, if you don't engage with me, Facebook will deem that you don't like me, okay? Don't like Market-Wise Asia, and you will not show you our Facebook Live in your Facebook feed in the future. So just give me a like and share, all right? At least give me a like. Liking is free. And first thing first, all right? So we have this Market Insights Virtual Summit that is coming up, all right, on the 10th and 11th of July 2021. I'll post the link again to you guys in the comments. You should be able to see it. Let me show you the site right now. So this is the Market Insights Virtual Summit that's coming up. All right. So we have, of course, quite a few heavyweights because over here we have 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏, one of the most popular author of this book called The Trend Following. And also he has I think about 7 million podcast followers. So, you know, for those who are in the trading niche, you should know him already. And of course, we have also Tom Basso, one of the original market wizards, and we also have Boris Schlossberg, okay, so the FX expert and the co-founder of BK Forex. And in fact, you know, he was the one of the guests during on Wednesday, 2 days ago, on my Facebook Live. So he shared quite a number of trade ideas. I hope you guys enjoy this session. And of course, we have some familiar faces. Of course, Colin Sell, Terrence Tan from the IG market, and of course, there are new faces. For example, we have Kah Yong from Malaysia, and also Kong Hao. And these guys, I'm going to share new information with you guys. You know, so please go ahead and register for this event. It is totally free, proudly supported by IG. That's why you can get this event for free. Just register for it. You know, just enter your name, email, and mobile, and you are good to go. And you receive a confirmation email. And if you didn't receive the email, right, you should see in your spam folder. So do check your spam folder if you didn't see the confirmation email. And of course, you should be able to see the link on the screen itself. So just go ahead and register for this event. And today, all right, let's get proper. So today, topic is how to use the comparative relative strength to find the potential top or bottom in a stock or even a sector. And by using CRS correctly, we're able to give you additional perspective and clarity, which can be your edge in the market. All right. So actually, in fact, I think I already used so-called the comparative relative strength a few times in my Facebook Live already. All right. So very simple. All right. For the price relative indicator, right, basically just to compare the performance of one security to another. Basically, it's like a ratio. So for example, you can compare stock versus stock, stock versus the index, stock versus sector versus index, stock versus sector, sector versus sectors, index versus index. Okay, so for example, like the example that I used before is like, for example, gold, the metal gold is going up. So should you be trading the gold miners or trading the gold itself? So in my previous example, I used, for example, GDX, the gold miner ETF versus the gold ETF itself. So it's GDX versus GDX, all right, versus the GLD. So basically, this is the ratio. This is the ratio. So basically, we are comparing one security to another security. So actually, how many of you actually already know about this comparative relative strength before I even talk about it? If it's the first time, you know about this, type 1 in the comment. If you already know this already, you can type 2 in the comments. Okay, if the first time you know this, type 1 in the comments. If you already know, type 2 in the comments. All right, so let me check for gauge. Or if you don't know, just type no. If you know about it, just type yes in the comments. So simple. I don't want to confuse you guys. So if you know about it, type yes. If you don't know, type no in the comments. All right, so yes to some don't know, some yes. All right. I already mentioned a few times in my Facebook Live before, so I'm going to just go through again with you guys. And of course, I will give you a link to that. This is not something new, all right? This is not something invented by me. And the reason why I want to talk more about it is because I often see such comparison in my Twitter feed, right? Twitter feed. Yes, I'm not sure how often you use Twitter, but Twitter is an excellent source for all the financial charts and all the financial news and information. It is short, concise, and get to the point, and a lot of charts for you to follow. And a lot of time, a lot of these are more traders. They like to use this kind of price relative strength to compare one chart against another. So basically, I'll share with you the link in the comments. So later, I'll go through this session proper using this RS first. The stock market wise, I'll go through later, right? The chart. Okay, so I'll post the link in the comments. So a number of you say no. All right, so yeah, let me go through this. Oops, hold on, 0. Okay, try to zoom in a little bit bigger so you guys can see. All right, so I think you guys can see, right? So basically, it's the relative strength. I repeat, relative strength. Compare one security to another with a ratio chart. Important with a ratio chart. Often, the performance of a stock against a benchmark. A lot of times, can be a stock versus the S&P 500. All right. So this is not the important thing one. Let me see. Blah, 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 not important. Okay, so the example they use here, for example, is the performance, for example, using Starbucks, all right, versus the S&P 500. Okay, Starbucks, SBUX, versus the SPX, the S&P 500. And of course, if you know, like Starbucks is actually under the sector called the consumer discretionary or consumer cyclical, depending on what you want to call it. So they also compare SBUX versus the XLY, the consumer discretionary. Okay, or you can even compare, the consumer discretionary versus the S&P 500 against this. So there are a number of permutation where you can use. Okay, so I go back again to this page over here. can stock versus stock, stock versus index, sector versus index, stock versus sector, etc. So let's go through the chart. Okay, let's go through the chart. Since right, it is talking about Starbucks. So why not we go through Starbucks as well, and how to pinpoint when you can enter Starbucks also. Okay. So let's first of all, so let's go through the chart over here. This is the Starbucks SBUX. This is the ticker over here. Okay, so let me add in my bread and butter indicator first, my pivot, my central pivot range and such. Right, this is the weekly time frame. I go to the daily time frame. I go to the daily time frame. So, all right, so example over here. So ever since the COVID sell-off, let me put into candles, easier for you guys to see. So ever since the COVID sell-off over here, right, Starbucks has been on a rise, okay? So how many of you actually entered into Starbucks? Of course, if you are under Colin SMT grad, you should be inside previously, but if you are not, doesn't matter. So just to tell you, all right, basically Starbucks has been on a rise. So when do you know it is a good time to enter Starbucks? Of course, if you are already following me, you should know that price above the cloud and above the central pivot range, for example, like this area. Okay, it's a good time to start to take notice of Starbucks already. Okay, but right, how do you know exactly when Starbucks could really rally higher and higher and higher? Okay, the turning point is that you really know Starbucks is going to run. How do you know that? And by using this price relative strength, you can compare it. Okay, so in this example over here, you can see that they are comparing Starbucks versus the S&P 500. Okay, so let's try that. So S&P, so basically very simple. If you're using trading view, SBUX, all right, you can see Starbucks, then you slash, okay, the SPY. I'm using the S&P 500 ETF over here. Let me remove my central pivot range over here and the rest of the cloud. Not that important. I don't want to confuse with so many things. And of course, my pivot, let me remove as well. Just do a purely naked chart. Okay, normally for the comparison wise, right, I will use weekly time frame. Okay, so follow me. I'll use with the weekly time frame, weekly chart. Weekly chart. Okay. So let's go back here in time. Okay, let's go back, zoom back here in time over here. All right. So this was the December the last year COVID sell off. So let's say, for example, you are here. Okay. You are here. Okay, can you follow me? All right. So price has came down a lot already. This is a comparison between the Starbucks versus the SPY. So price has came down a lot already, and actually you can use the standard technical analysis tool like support and resistance, the classical one, and try to plot. So why this could be a potential support area, right? Okay, support area. This was the past support area, right? Broken down, become resistance area over here. So you can draw a support and resistance line over here. Can see, can follow me, All right, can follow me, So of course, at this point in time over here, follow me on the right hand side over here. Of course, you won't know price is going to reverse. You won't know, right? You won't know. So after a few weeks later, 2 or 3 weeks, they realize, hey, this is supported at this area over here. And when is the date over here? The date is 31st of August. 31st of August, that is about September 2020. So remember this date, September 2020. Okay, so it could be a turning point already. Okay, so can follow me so far? Can follow me? If can, please type a yes in the comments. Okay, while I continue, so that I know that most of you can follow me. Now we have compared Starbucks versus the SPY. You also know that the Starbucks is under the consumer discretionary. So SBUX, okay, versus the consumer discretionary is XLY, the sector. This is another chart. All right, so I've already drawn the line, okay? Very similar to the S&P 500 ratio chart. So this is the SBUX versus the XLY over here. Can you see this is very clear kind of support resistance over here, okay? Very clear, okay? Very clear. All right, so at this point in time, you know that, when price came down quite a bit at this area at about, again, is at start of the September, price started to head higher already, okay? Which tells you that, Starbucks, could outperform the consumer discretionary sector and also outperform the S&P 500. Remember the date that I tell you? Remember that it is September 2020, right? September 2020. Okay, so let's go back to the Starbucks chart itself. Go to the daily time frame. All right, daily time frame. So I have already plotted out this vertical line over here. This is the start of September already. So ever since the start of September 2020, price started to head higher. So this is actually how you can pinpoint whether the trend is going to persist and catch the bottom based on the ratio timing. All right. And of course, at this point in time, you may be thinking, hey, how do I enter? No, nothing to guide me. If you have been following me, you can add in your cloud and your central pivot range, your pivot points and such. All right. So what can you see over here? Okay, September over here. Of course, you might miss this timing over here. But once at September, all right, for me personally, I won't chase the price now. So price has already gone up so high already. Okay, you can wait for it to pull back here. All right, then this is a good time for you to enter. Go up, pull back to the CPR and enter once again. So you can ride the trend. So this is how you use the ratio, the comparative relative strength, to help you pinpoint when is a bottom or top, or when it is a good time to enter into a particular stock. All right. Are you guys learning something new so far in this session? All right. If yes, please give me type yes again in the comments. I'm learning so far. Okay, so right now we have about 166 people in the room. Thank you for joining me. I know there are some people who join me a bit later, so please give me a like and share in the comments. Also give me a like, okay? Liking is free. Also tell Facebook that you enjoy my comments and also want to see more of me in the future. Because if you don't give me a like or share, Facebook will deem that you don't like my content and will not show you my Facebook Live in your Facebook feed in the future, okay? Okay, so 𝗖𝗺𝗃𝗃 is saying that it's a bit cheap. Okay, basically it's just trying to do a ratio, okay, a ratio. All right, ratio. So basically, if you say cheap, basically I'm trying to compare A over B, okay. If A is performing well, it's going to go higher, right? Of course, then the ratio will go higher, the number will go higher also, which means that A will outperform B. Right? If B is underperforming, going down, the ratio will come down. You get what I mean? Or if A is coming down, the ratio will also come down. So basically, it's A versus B. And in this example, I'm using the Starbucks versus the S&P 500, or Starbucks versus the consumer discretionary sector. Simple? If you still don't get it, never mind. I will go through a few more examples over here. Okay, so in my previous Facebook Live, right, I actually mentioned some of these certain industry that I mentioned that I think has a potential to go higher, right? I'm not sure how many of you actually remember, but I still keep track. I know exactly what I say. So I mentioned about PEJ, cannabis. This is the MJ, IBB, all right, IBB. This is the biotech, hydrogen, lithium, solar, and carbon. All right, so I'll just focus. Let me try to see. I'm gonna focus on this IBB first, biotech. Basically, the health sector and the biotech industry are performing quite well. So, judging from the chart itself, IBB, okay, IBB over here. Okay, of course, price has already gone up already, okay? So you don't see this part over here, all right? So at this point in time over here, it is a big ranging movement, right? Am I right to say that? Am I right to say that? So I think you guys can see that. So it's a big ranging movement. So how do I know that, IBB, there's a potential that price is going to head higher? Okay. So of course, the first telltale sign, right, is price is actually above the central pivot range. This is the first telltale sign. It tells me that price is actually, the downtrend is actually weakening already. It's actually weakening already. And although price is below the cloud and below the central pivot range, right? But you need to look at the higher time frame perspective over here. On the longer time frame perspective, IBB, the biotech ETF, overall it is still in an uptrend and pullback. So anytime the price could turn and go higher, you need to prepare for that. But how do you, in a way, time it? So of course, I say the first telltale sign is when price started to go higher and not going any lower anymore, and price is above the central pivot range. And other telltale sign you can do is using this comparative relative strength. Okay, so IBB, you could do the ratio IBB versus the S&P 500. I use the SPY once again. Okay, so again, I remove all the cloud everything. Pivot, remove. Okay, I use the weekly time frame. This is the very long-term time frame. Okay, since 2002, since 2002, I'm not sure you can see, since 2002 until now, this is a long-term time frame. So I plotted the trend line also. Of course, you can draw those a bit higher up, but not in focus to me because too far away already. So just concentrate on this area over here. So as you guys can see, price actually respect the trend line pretty well. Okay, so you can see price tested the trend line support, rebounded. Okay, and once again, price tested the trend line over here, and then it start to rebound over here. Can you see after a few weeks time, price started to rebound? All right, so actually, at this point in time, you could really take a bet that price could hit higher, and you can confirm it using based on the daily time frame. So whenever you see, so the time here is 17th of May, somewhere around here, 17th of May. So you go back to the IBB over here. Go back to the daily time frame, 17th of May, it is somewhere around here, okay? Somewhere around here, this part over here, which is, it haven't run yet, okay? So if I put back the pivot cloud, okay, over here, 17th of May, it's somewhere around here. Somewhere here. But personally, at this point in time, I still won't enter yet because I'm really not sure price will hit higher or not. And I only enter when, somewhere around here, that is the start of June. Okay, so in fact, I was looking at that, but I didn't enter because, I have limited capital. I cannot enter every single trade because I still have a few positions left. But IBB was one of the positions that one of the ETF that I was looking at. So this was a very good time to enter somewhere around here. Okay, at the start of June, and indeed, price actually rebounded and hit up higher. Okay, so and if you are still a bit confused, let's try another one. So we do IBB versus the XLV. IBB is in the healthcare industry, so XLV. Let's compare. So you have a clearer understanding. So this is a different kind of comparison using ratio to give you a confluence that this is really a good time for you to enter into the biotech ETF. Okay, so again, this is the IBB versus the health industry, health sector, XLV. Okay, so I use the weekly time frame. Again, I repeat, for the comparison for the ratio, I tend to use a weekly time frame. So that sometimes the daily time frame can be a bit too noisy. Okay. Again, Can you see price respected the trend line? This is a trend that I've already pre-drawn already, you see, so it is quite clear cut to me. Of course, if you are new, you might have difficulty in drawing trend line for me, but for me, it is quite okay. One glance, roughly you should know, okay, this is the following the trend over here. All right, so again, price tested the trend line a few times, right? Seems to be doing well. Tested the trend line over here, came down again, and once again tested the trend line over here and started to go higher. Can you guys see now? Can you guys see over here? Okay, so when was the date it started to go higher? So again, this is at about 17 May, you know, when price break the previous week high, is somewhere around here, 17 May. But of course, I will only enter at the start of June, which is somewhere around here if I want to enter. Are you guys able to follow me so far? If you can follow me, please type yes again in the comments, okay? Am I making sense to you or not? Is it too cheap for you, or you get it, or you get it? If you get it, right, just type get it in the comment. Get it, okay? So at least I know that most of you guys can get it. So while I answer some questions so far, so Encha is asking enter only when it is more than 1.0. No, basically the numbers are not very important. The important thing is you need to see how the price, how the price move, how the price moves. So for example, you know, price is the line is heading higher, which means that IBB is outperforming the health sector. When price is coming down, IBB is underperforming the sector. Once again, it's going higher, IBB is outperforming the health sector. Coming down, IBB is underperforming the health sector. Right now, IBB is heading up again. So it tells me that IBB is outperforming the health sector as a whole right now. Okay, so can get it so far? Yes. And let me remove this. Ash is asking, how can I get all the dotted line? You're mentioning regarding my central pivot range and the pivot point, right? So I have this tutorial over here, how to set up the cloud, the pivot points, and the central pivot range. I'll post the link in the comments. So Ash, you can just read it and you know how I get all this in this YouTube video tutorial. Okay. Let me see. Give me a moment. Ling Chen is asking, can we see until now or wait for retrace? Okay. Again, this is a very difficult question to answer. Let's go back to the IBB, the chart itself, IBB. Okay, I will add in pivot points, my CPR again, and the cloud. Okay. Personally, I will enter now because price has already ran already. For me, I will enter here. And by now, I will be looking to take profit already, not entering now already. Of course, it depends on how you want to trade. If you are a swing trader, right now it is not the time for you to enter. It is at a high to me. All right, so I'll prefer price to retrace it, maybe to test the R1 resistance level before I decided to enter again. Okay, of course, if you are a position trader, when you hold for a few months to about 1 year, then of course you could, but doesn't mean that price will not come out. It could do like this also. So you need to place your stop at a reasonable area over here, maybe somewhere around here, okay? But for me, I wouldn't enter now. I would prefer a retrace or correction, or if I can see a wash and rinse pattern, for example, one of my trigger, which I won't want to disclose too much, then I will go inside. But generally, it has ran quite a bit in this past few days already. So wait for some kind of pullback, then you enter. Siva Guru is asking, does it mean we can enter biotech? Okay, it is, the trigger is totally up to you, but what I'm trying to say that, you know, IBB is an industry that you can look right now. I think I'm still pretty bullish. Normally when it trend, you see the chart over here. Like for example, IBB versus the health XLV. Weekly time frame. Can see normally it can trend quite a number of weeks. Can see a number of weeks here, a number of weeks, potentially can trend a number of weeks. So you can see over here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 weeks, that's about a few months already. 13 weeks, that's about 3 months. So it can trend for 3 months. So of course, it comes down, it can also trend for a few months also. So really depends on your entry and trigger, your preference, whether you are doing swing trading or position trading. So there's no very specific price I can tell you enter or cannot enter. Okay, I hope you get my idea over here. Rusty is asking, based on the weekly trend of IBB versus XLY, how many more months before it will hit resistance? Okay, so all right, so I won't know. Basically, as a rule of thumb, can trend for 1 to 3 months. And if you're looking at the standard support and resistance area over here, it is somewhere around here. Okay, somewhere around here. Okay, let me remove that. My lines can be messy if you. Okay. All right, so people range over here. I won't know basically I won't know. So we have to see the price action itself on the IBB itself, the time frame. Okay, so there's a minor resistance over here. Can you see over here? This is the resistance, okay? And then there's a resistance over here. So it is somewhere around here also, okay? So it could take, a few weeks, 1, 2, 3 to hit this resistance over here. And then you take a look whether price, is there a sell-off, that kind. So we won't know until price hit that area. And of course, price could also continue to head higher a few more weeks before price comes down again. So you need to monitor the price action on the IBB ETF itself. All right, can get what I mean? So Imran is asking, so the idea of comparison is the specific stock against its group sector to be relevant. Okay, so Imran, as I mentioned, there's a lot of permutation. You can compare stock to stock, stock to sector, stock to the index, or even sector to sector. So you can just play around with it, see what kind of perspective can you get from all these relative ratio. Then you'll see what makes sense to you. Okay, I'll go through a few more examples, then you have a better understanding. Okay, so back to the this over here, right? So I mentioned that I also I didn't write it here, but I told one of my Facebook friends that I'm so-called interested in the cloud computing, cloud. So the ETF is CLOU, cloud. So let's go to the cloud ETF, cloud computing ETF. CLOU, cloud computing. Of course, cloud computing is under technology. Okay, so this is the daily time frame over here, based on your judgment over here. Okay, so like cloud, like that, based on what you see like that. Okay, just purely based on cloud computing, like that. Can buy or cannot buy? Yes or no? If you think can buy, type yes. If you think cannot buy, type no. I just want to have a feel, right? That kind of your feel how will you view cloud computing right now? So for those who don't know what are the components in this cloud computing, I'll go to etf.com/cloud. So what are the holdings for this ETF? All right, so let me try to zoom in over here. Let me see the components over here. So cloud. All right, so a number of stocks you guys are familiar: Dropbox, Zscaler, Zoom, Fastly, Shopify, Salesforce, Twilio, Akamai Technology, Paycom, Netflix, and such. Quite familiar, right? So cloud, let's go back to the cloud. Can buy or cannot buy? Can buy or cannot buy? No. Gary say yes. Bokri say no. Seems to be breaking out. Eng Chai says seems to be reading say can buy. Wave Rider say yes. Okay, so how do you know? So if you are just looking purely on the this price itself, you might think that price is undergoing some kind of consolidation, right? There's no trend. Of course, if you add in my cloud and all the pivot, okay, you should know, okay, of course, when price broke below the cloud, no buy. This is a no buy. Cannot buy one. Cannot buy one. So ping pong, ping pong, ping pong. Cannot buy until when price started to go back against the CPR again, central pivot range again. Okay, so this is the time where I entered here. Okay, I entered here. I'm not sure whether you guys can see. I'm trying to zoom in over here. I entered here 4th of June. 4th of June. So this is the time where I entered over here, 4th of June over here. So why do I enter? All right. So of course, the number one reason is of course based on the price of the cloud ETF itself. Price is above the CPR and seems like it's tested this pivot range and doing quite well. And there's a trigger that I wanted to see. So basically, this is wash and rinse pattern. Sorry, I entered on the 7, not on the 4th. 7. I entered the 7. Okay, I entered the 7. So it's this big bar over here, this big candle bar over here, wash and rinse pattern over here. So this is the first signal, the clue that it tells me that it is potentially could go higher. All right. So of course, cloud is under the technology sector. So what is the sector for technology? It is XLK, right? For the tech sector. So we can put CLOU versus the XLK over here. Okay, so I need to remove the lines again already, not to confuse you guys. Remove. Okay, so again, whenever I do ratio, I tend to use the weekly chart. Of course, cloud computing, this ETF doesn't have a lot of history. Okay, it's only the inception date is in 2019 April. Okay, so only a few years only. But can you see over here, I still can draw this trend line pretty well. Okay, so if you don't know how to draw, all right, so let me try to. Okay, at first glance, how do I draw it? Okay, so to me, it takes experience and some knowledge also. But generally, if I draw, I will draw something like this. Okay, if I draw something like this, okay, something like this over here. Okay, then you do a projection downwards, see whether it fits or not. Okay, still fit pretty well over here, and then you go down over here, somewhere around here. Okay, so you can still fit into this trend line pretty well. So at this point in time, I can see that cloud computing is at a support already. Okay, versus the XLK tech sector. Do you guys get what I'm trying to say? So this is the cloud versus the XLK, the tech sector. So basically the cloud computing has been underperforming the overall tech sector. Okay? But it seems that when price hit this support area over here, starting to turn up. Okay, it seems that there could be a turn. And if you go down to the daily time frame over here, all right, it started to turn somewhere around here, which is 17 or 18 of May, like the previous one, like the IBB also 17 or 18. But I go to the cloud itself, the ETF itself, 17 of May. I cannot enter here now. I only enter somewhere around here. All right. Again, besides comparing cloud versus the tech sector, you can also compare cloud versus the S&P 500 also. Okay, so the CLOU cloud versus the SPY ETF. I also drawn the trend line also. So go to the weekly time frame over here. All right. I remove again so you guys can see how I draw it. Okay, at first glance, I can see that price seems to respect. Oops, I should use this trend line over here. Price seems to respect this pretty well. All right, and I project upwards. Okay, also respect this also very well. Then project downwards. Ta-da! Can you guys see it? So it is also responding at the trend line support over here, and price started to go higher. So this is one of the reasons I am also bullish on the cloud ETF itself, the whole industry itself. So do you guys get what I mean? Okay, but of course, I'm not telling you that you can buy cloud now. Please don't copy me. I'm just sharing with you what I see from the chart. So just give you some trade ideas. You guys can decide for yourself whether you want to buy or not to buy. It's up to you. But for me, again, when it trends, price can trend a few months up, okay, a few months. So we will see. So I don't know, we'll see. But I have a position in cloud. So how is it so far? Am I providing good value for you guys so far with this case study? If I am providing good value, please type value in the comments once again. All right. Well, I'll take a break first. If you guys are learning good stuff, right, please type value in the comments. Wow, I just do a 3 minutes kind of advertisement. Okay, so we have this Market Insights Virtual Summit coming up on the 10th and 11th of July. So for those who just joined us here, welcome to MarketWise Asia Facebook live over here, right? So we have quite a number of heavyweight speakers over here. 𝗖𝗺𝗶𝗃𝗲, the author of the following popular book, Trend Following, and Tom Basso, the original market wizards, and also Boris Schlossberg, of the FX expert. And of course, we have quite a number of the usual resident speakers like Colin Sell, Terence Tan, and Terence. This is also Terence Tan, and also new speakers like Ka-Yong, Jun-Yong, and Kong Hao also. So the event is free, proudly supported by IG Market. And if you like what I'm sharing, I'm sure you'll get a lot of information and content-packed sessions at their sessions as well. So please register for free. Just click on the register button here, just fill your details, and you are good to go. I will post the link in the comments. Where is it? Where's the link? All right, I'll post the link to you. So to register for this event, it is totally free. Okay, so just register for it and get the value of this session. Okay, so let me see the comments so far. Thank you so much for all your response. Okay, I hope you guys learned something. I don't think a lot of people actually quite share this kind of information. All right, so Ash is telling me value, although I don't quite understand. Okay, essentially, okay, you can try to rewatch my session again. Okay, but essentially, I'm just trying to compare ratio A versus B. Okay, and if it's moving up at a support, then it's a good time to buy. Okay, simple as that. I'll try to go through a few more examples over here. Okay, so the previous one that I mentioned is, I think the first time that I mentioned about this ratio thing is, some people is asking, is value dead, okay, or is growth can continue to go higher, that kind of. So I use this IWF. IWF is the ETF, is the no, it's IWF versus the IWD, the value one. So that was the first time I mentioned to you guys, right? So at the start of the 2021, I mentioned that at the point in time, value is actually outperforming the growth stocks, because this is growth versus value. So as you can see over here, growth stocks, all the tech stocks has been outstanding, have been rallying for many years until here, the peak in August 2020, and then the growth stocks start to come down and the value stock re-emerge again, and a lot of value stock are moving up again. Okay, so if I add in my pivot and such, I just use the cloud. Okay, so at this moment in time, do you think growth is rebounding again from this chart, or using growth will continue to underperform the value stocks? Okay, so I'm not sure what's your answer. All right, so but for me, it seems that the growth stocks are ready to rebound again, and moving higher, and price is trying to hold above the cloud area over here. So it's trying to stay as an uptrend. It's trying to stay as an uptrend. So there's a possibility, you know, all the tech stock, the growth stock might continue to head up higher again. All right. This is just my personal opinion. All right. So what else? Let me try to do some more example over here. Okay, my favorite XOP, the oil and gas industry. So in this example over here, all right, we can also use, for example, the XOP slash the SPY over here. All right. So based on your understanding with me, for those who have been following me, okay, so the oil and gas sector, especially this XOP oil and gas exploration industry, do you think it is going to outperform the S&P 500, or do you think it is going to underperform against the S&P 500? Okay, let me know your answer. Outperforming, please type O. Underperforming, please type U. Outperforming, type O. Underperforming, type U. You should know the answer lah. Okay, use the cloud as your basis. Is it above the cloud or below the cloud? All right. Outperforming. I see willing answer. Only one person can answer. Is it? So how about the rest? Is it going to outperform or underperforming? Jess say, oh, Amanda say outperforming, you know, outperform, right? Okay. Yes. Okay. This is just my personal view. So we are using the XOP versus the S&P 500. So you can see over here, it is starting to head higher already. Okay. It's starting to head higher. So which tell us the whole energy sector, it is going to outperforming the S&P 500. All right. It is not surprising. Okay. I will show you later. It's not surprising. We already know the answer if you have been following my Facebook Live. All right, so we can also use the XOP versus, for example, the energy sector by itself. All right, so the XOP versus the XLE energy sector. Okay, so you can also see recently it has also been outperforming the energy sector. By the way, energy, there are a few industries, for example, oil and gas exploration, you know, oil and gas equipment and such. Okay, let me see some of the few sector, as in the industry for the for the energy industry. Let me see. Let me look for a while. Okay. Cannot. Okay. So can you see for the energy, there is a few one, like, you know, the broad one, the equipment, and the oil and gas exploration. So there are a few now. Okay. So this is a bit tricky. This is more tricky. Okay. So of course you know that it is outperforming the energy sector, even for the XOP itself. But where do you think, you know, you will start to underperform when the time comes? All right. So of course, you know, the first time, you know, it is over here. Okay, this is the resistance area over here. Okay, resistance area over here. And can you see price actually, you know, kind of stuck there, and then price came down. So it follows classical TA very well as well. You can just use this ratio and how you used to analyze chart to analyze this ratio chart. All right, so can you see there's a pullback over here because of this prior support turn resistance area over here, okay, which is this period over here, right? This XOP daily, okay, it is actually this period over here where they underperform comparing to the overall energy sector. All right, so I go back to the XOP versus the XLK. Weekly time frame again. Oh, no, XLK is XLE. No wonder I find it strange. Okay, so when you think, you know, XOP will kind of get stuck again? in my personal opinion, we are approaching that soon. So there's a one cluster of resistance area over here, which is somewhere around this area over here. And then we also have a resistance prior support and resistance over here, which is somewhere around here, which we are approaching already. So if you are talking strictly on this low over here, then we have already approached already. Alternate H, okay? So we are hitting right smack at the resistance. So I'm not sure whether XOP can continue to hold higher, which I'm holding for a long-term position over here, but we'll see how it goes. But generally, just to give you a good idea, so right now we are heading to a resistance range over here. So, potentially price could go down lower. All right, do you guys get what I'm trying to say? Ash is asking how you tell outperform. Very simple, very simple. So basically, this is a ratio chart. So basically, this is XOP, the oil and gas exploration versus the oil and gas sector itself, XLE. Very simple, okay, very simple one. If price is coming down, which means that XOP is underperforming. If price is heading up, we know that XOP is outperforming. So this is a ratio chart. This is a ratio chart. All right. So Chuck Hong is asking, clean energy included. Clean energy, what is the industry? Clean energy, let me see, ETF, 𝗖𝗺𝗺𝗏𝗏. Let me take a look at some of the clean energy. Is it under the energy sector as a whole? Anybody knows the answer? If you can, please help me to answer. Let me take a look over here first. We can see some of the stocks. 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏. Stock code. Clean energy can be under technology, not as the XLE energy itself. Can be under technology. For example, 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 Okay, plug is under technology also, if I'm not mistaken. Where is it? Plug. Plug is under this industrial. So, okay, if you're talking about 𝗖𝗺𝗃𝗃, so it is a bit tricky. Okay, it's a bit tricky. So let's say, for example, over here, if we take a look at Enphase, it is under technology. If you are talking about Plug Power, it is under industrial. All right. If you are talking about Xcel Energy, it is under, is it Xcel Energy? Yeah, under Xcel Energy, it is under utility. So clean energy as by itself is really not under the the XLE sector. Okay, so I think I can conclude that. I think I can conclude that. So yeah, so it's not under the energy sector. So clean energy is not under the XLE energy. All right, basically it's oil and gas and some of the uranium, if I'm not mistaken. Okay, so another one which I like to go through is this uranium. Okay, is URA, okay, which I've been quite bullish on. Okay, so versus the SPY. Weekly time frame. Again, if you cannot see, this is URA, the uranium ETF, versus SPY. All right, so this is the chart. Okay. For me personally, I think this is on an uptrend now. So you can see that price broke above the cloud and uranium is outperforming the S&P 500 as a whole. So to me, that this is quite bullish to me. So this is how you compare certain industry versus the S&P 500, or even can use, for example, I'm holding this CCJ, all right, and versus the SPY. All right, so you can see over here, also outperforming the S&P 500. All right, so I hope you guys are learning something from this kind of relative strength analysis. And let me see, any questions so far regarding this? So let me try to go back to this slick chart over here. As I mentioned, right, energy is outperforming the S&P 500, right? So if you go to a slick chart over here, I post the link in the comments. Components performance. Try to zoom in. Right, you should know lah. See, irritating the ads. Okay, so American Oil is energy, Devon Energy, EOG Resource Energy. Okay, Hess is energy, Occidental Petrol Energy, all energy is Schlumberger is also energy, APA is also energy. So definitely the energy is outperforming the S&P 500. Can you see the return so far by all these oil companies? Year to date, American Oil is 100% really. Okay. WH is asking, can compare stock versus okay, interesting, right? I also did that previously. So which one do you want to compare? FCX versus, let's compare FCX, Freeport McMoRan. This one is a copper miner versus the S&P 500. All right. So what do you guys think? So WH, based on this chart, what do you think? I remove the cloud. Okay, what do you think? Since you asked me, right, so maybe you can try to answer. What do you think before I try to give you my opinion? Is it, of course, you can see over here, all right, for the past 2 years, copper has been outperforming, FCX has been outperforming the S&P 500 since 2020. All right. It's uptrend, but you need to be aware, Danny, you see, based on the longer term time frame, we are hitting right smack at this resistance over here. You can see this low over here, all right, and we draw a line over here, horizontal line as a support resistance area. And if we go down over here, it is starting to come down already. So there's a chance that, price could continue to fall downwards. Of course, you won't know. We have to see the price action, but you need to know there's a potential that, FCX might underperform the S&P 500 in terms of in the weeks or in the months to come. Okay, because we are hitting right smack at this resistance area over here already. Okay, resistance area over here already. So you have to be careful. So of course, if the whole commodities theme is still in play and it can continue to go up, but copper, the recent price action has been also quite parabolic. So be prepared that price could do a pullback in the recent weeks or months also. Okay. And if you're comparing the FCX versus the copper miners, but FCX is a copper miner itself. So it should be the same now. Okay, COPX. Okay. So yes, FCX has also outperforming the copper. So can you see over here? They are in a narrow range. So which means that it is basically moving in tandem with each other. They're not moving. Okay, so it's only in recent years, in recent 2 years, FCX outperformed the other copper miners ETF. So yeah, so right now it is still outperforming, and we are also hitting the resistance area somewhere around here. So this is the resistance area over here. Can you see over here? Okay, so draw the line over here. Right, so we are also hitting at the resistance over here already. So in the coming weeks or months, okay, FCX might underperform against the COPX, which is the copper miner ETF. So this is my personal view. All right, so any questions so far? Oh, by the way, I want to talk to you regarding this also. Right? So I'm sure you guys know about this CPI data. So yesterday, the inflation, the CPI, is up 5%. Okay, so based on the news over here, CPI May, all right, consumer price jumped 5% in May. That's the faster pace since the summer of 2008. Okay, so let me take a look first. All right, so you can see that it is the highest inflation since August 2008. The core CPI was 3.8%, the highest level of inflation since 1992. Okay, and so this kind of data raised a number of questions. So what I'm to say is that can the Fed try to control the this inflation or not? Okay, how should I say it? Okay, basically Fed has two options. Okay, basically the Federal Reserve has two options: to raise interest rate or not to raise interest rate. Okay, so to interest rate to combat the inflation. Okay, I don't know, difficult to write. Okay, never mind, inflation. Okay, or allow the inflation to continue to head higher, okay, and continue with the low interest rate, and then which in turn will drive down the US dollar. Do you guys get what I'm trying to say? So this is like a catch-22. Should I raise the interest rate to control inflation, or should I suppress the inflation rate? And such. So how should they do it? But what I'm seeing from the market is something quite interesting over here. Is this 30 years bonds over here? Okay, 30 years bonds. Let me try to use this. Where is it? Okay, 30 years treasury bonds. Daily time frame. I added in my chart. All right. So even though the inflation rate is higher, all right, and there's a possibility that the Fed could increase the interest rate, but okay, the Treasury price is heading higher. Okay, which means that the market is discounting the fact that they are thinking that the interest rate will be suppressed, continue to go. Price goes higher up, okay, which means that Treasury bonds and interest rate are inversely related. Treasury bonds and interest rate are inversely related, which means that they are thinking that the yield is going down. Okay, so you can see from this price chart, price actually broke above the cloud based on the daily time frame, which tells me that the market is signaling that the Treasury bond price could go higher in the days, in the weeks, or in the months to come, which means that the Treasury yield, the yield will continue to go down, which is quite the opposite of what the CPI data is trying to tell us. So I am not expert over here. I'm just trying to tell you, how can we reconcile this conflicting signal? So, which means that the market is telling us that the market is thinking that the Federal Reserve will not try to control inflation and will continue to let the interest rate to be at a low level. Okay, at least this is what I think from the chart point of view. Okay, if they think the market think that the Fed is going to increase the interest rate, right, the yield will go higher, but this is not reflecting it right now. And of course, if the interest rate is, the yield is going to come down lower, which means that the XLF, the financial sector, it is not going to do pretty well, because in a low interest rate environment, the banks is not going to like it. The bank is not going to do well. And if you are looking at the XLF right now, the financial sector right now at the moment, it is not very strong. Can you see it is struggling to go higher, and then it's starting to come down again. And to put into use of what we have learned today, right? Okay, let's try it, right? Let's try XLF versus SPY. Weekly time frame over here. All right, so I remove all the other lines over here. Okay, so can you see over here, this is a weekly time frame. The prior support turn resistance area is this area over here. Okay, it's a cluster of supported price over here. All right, and when price, the XLF versus the SPY hit, the ratio hit here, price started to come down. So now, do you know the reason why the financial sector is coming down recently for the past few days or one week time? You know why? So this is one of the reasons why. Okay, so XLF versus SPY. So so do take note. So the financial sector is coming down, which means that the bank is coming down also. And let me try to go through this, okay? The SPDR, you need to know the S&P 500, okay? Technology is a very big component. The S&P 500, the tech stock made up of 26%, all right? And the XLF, I think one of the biggest one was number 2, is it? It's made up of 11%, 12%. So XLV is made up of 12%, which means that, there's a chance that, XLV is going to go down. In order for the S&P to go up, right, the rest of the industry or the sector has to go up so that the S&P 500 can continue to head higher. Do you get what I mean? I'm not sure whether it sounds confusing to you or not. If I know the I repeat, if I know the financial sector is going to come down, okay, in order for the whole S&P 500 to continue to head higher, the rest of all this sector must go up, right, to compensate for this SLF going down, right? You guys get what I mean, So of course, XLK, the technology sector, seems okay, seems promising. So potential it can continue to head higher. And of course, I'm also bullish on the XLV. Okay, XLV is health sector, so it's 13%. Okay, so the XLK, the tech, and the health can go higher. All right, which means that it's enough to compensate of this XLF over here. So my view is that the market can continue to go a little bit higher, but do not expect to be the kind of S&P 500 to S&P. Let me see, S&P. This is the ES, S&P 500 over here. So can you see right now it is ping pong over here. Market doesn't have a direction. Okay. So it can continue to head higher. That's a personal view, but do not expect to go something like this. Maybe, still sideways a bit, up a bit, down a bit, side a bit, up a bit. All right. So this is the reason why, because, I think the finance sector is coming down, but, the tech and the health can be going up. So kind of compensate, but not much. So overall, the S&P 500 could continue to head higher, but don't expect a very kind of big rally upwards unless all the other whole sector are rally lah. Okay, you get what I mean? Okay, if you get what I'm trying to say, please type a yes in the comments. I'm not sure whether it sounds a bit too confusing or too cheap to you guys. All right. So Ethan is asking, right? So do you have a systematic way to take profit or progressive? For me to take profit partial when it touches upper trend line channel. For me, if I doing swing trading, as you should know by now, by default, is doing swing trading. So if I'm doing swing trading, can just hold for a few days to at most 1 month, that kind. So normally, if my risk to reward is 1:1 or 1:2, I might consider to take profit already. So anything between 1:1 to 1:2, I will take profit already. So I think for swing trading, I'm doing just short term wise. So 1.5 to 2 times the reward, I am okay to take already lah. Okay. So yeah, I don't have a very systematic way of taking profit, because for me, I have a very systematic way of entering. But taking profit, for me, to be honest with you, it is quite discretionary. It's quite discretionary. I will see how the price reacts at certain levels. Whether I want to be a bit more kiasi. If right now I risk $100, okay, and I make okay, I'm trying to do it. Okay, right. So if I risk $100 and price move up, and right now I'm in profit $150 already, okay, I might still hold a little bit longer, but maybe a few days later, price started to come down, become 130 profit already. Then I might just take that already, because to me, the risk reward 1:1.3, it is still decent to me. All right, so I might take profit. So this is discretionary. Of course, the best is 1:2 lah. Okay, I risk 100 and then I get 200 profit. That is the best scenario. But sometimes you don't get that. We have to admit that. So between 1:1 to 1:2, I will take profit already. So I hope that answers your question. And I don't know whether it's a good answer to you, but it's really discretionary for taking profit for me. Okay. All right. And yeah, so okay, good. So I can see you guys are understanding what I am trying to say. So right now for today, let's take a look at the market right now. Let's take a look at market in out. Where is it? Okay, so last one before I go, start watch list over. Let's see what is performing well today. Let's zoom in over here. Can you see? Lithium battery is doing pretty well today. All right. MLP, I'm not sure whether you guys can still remember. I mentioned about MLP, I think a number of Facebook Live ago. Copper is still doing quite well. Solar, 10. Can you see over here? All right, 10. Lithium, it is doing pretty well over here today. And clean energy, I'm starting to see clean energy to go up. All right, so you can take a look at that. And uranium as well, 3D. Okay, so basically the top few is the lithium, the MLP, copper miners, the retail, and the solar. And for today wise, right now the market, it is down slightly. Okay, so it's down slightly. So still quite okay lah, a bit flat to me right now. So market has been in this narrow range for quite some time already. Can you see in this narrow range? So again, I need to warn you guys, to be happy-go-lucky and keep stacking more position. So control yourself. Don't over leverage. Don't have too many position. Control position, because we won't know whether the market is going to chong higher or already have a steep pullback. So don't over leverage. Manage your position. All right, manage your position. Okay, important. Manage your position. Don't have too many position. So I hope you guys can understand what I'm trying to say. All right. Ash is asking, may I know what's the difference between the green and the pink cloud? Green and the pink cloud. It is based on the formula, all right? So don't try to, it's not important. So don't try to understand what's the difference between the pink and the green. Just understand that when price is above the cloud, it is on a downtrend. When price is below the cloud, it is on a downtrend, right? Simple as that. So I think I've talked enough for today already. So just a very quick recap over here. All right, today we go through the comparative relative strength. Basically is to compare one security versus the other security, and using that we are getting the ratio. and we are using that to see whether one security is outperforming the other, and we can also use our stock versus index versus stock, that kind of. So there's a lot of permutation. So it can give you additional clarity and perspective, right, instead of just looking directly at the stock or the ETF by itself. So I hope you guys learned something new today. So last call here, if you haven't liked my Facebook page or haven't given me a like or share, please give me a like or share, right? If you think this is something of value to you today, and I think I always give something good stuff to you guys, okay? So give me a like or share, and also to tell Facebook that you enjoy my content and want to see more of me in the future. Because if you don't engage with me, Facebook will think that you don't like me and won't so-called show you more of our Facebook Live on your Facebook feed. So do give me a like and share. Liking is free. And last call, we have this Market Insights Virtual Summit that's coming up on the July 10 and 11. Do register. It is free, proudly supported by IG. We have a lot of content-packed sessions over here. The keynote speakers, Michael Cobell, Boris Schlossberg, Tom Bessel, the original market wizards. I think it is going to be a blast, and you guys are going to learn a lot of things from this session. So I will post the link once again in the comments. So do register for this Market Insights Virtual Summit. I'll post the link. You should be able to see the link in the screen also. So today is Friday. Tomorrow is the weekend already, Saturday and Sunday. So I hope you guys are going to have a very fantastic, good weekend ahead. All right, have a good rest, and I will see you guys again next week. Good night and 晚安. Bye-bye.